With COVID-19 cases now exceeding 5 million, we also touch upon the US-China conflict and how this is affecting the markets for you. All this with Bob Mason of FX Empire. This is your Midweek Market Drivers. Hello, Bob, and thank you once again for joining us. Let's dive straight in. Corona numbers have increased now globally to exceed 5 million. But how's that evolving in the EU? How's it affecting the markets?
Yeah, aside from Spain, which has had one blip above the 1,000 mark, we've seen the four most affected EU states, those being France, Germany, Italy, and Spain, see sub-1,000 new cases each day for the last 9 consecutive days. We had some concerns over how quickly governments were planning to ease lockdown measures. And when we consider the fact that, there's about a 2-week incubation period where symptoms are not clear, these numbers are fairly positive and should give the market some hope that a second wave could be avoided. We're about a 4 or 5 day period out, however, for that to really, bed down. And, for the more pessimistic, perhaps another week to really be sure that there's no second wave that's going to hit the EU. If we're looking at China as a base case, that should be supportive. And then we're looking at, obviously, virus, vaccine news, and so on, which has been market positive, late last week and through the early part of this week. So all in all, that's pretty good news for the EU.
So it seems the coronavirus is having a huge effect on the global markets at the moment. Can we see this improving maybe in the near future?
We're seeing from the economic data, we're now shifting through to sort of May, June numbers. Remains on employment numbers and consumer and business confidence. In Germany, we saw this week both business and consumer confidence see a slight pickup. That's coming off the back of easing of lockdown measures. The key, however, and we continue to point this out, is that labour market conditions, these do really need to materially improve for confidence to pick up to the point where we can see consumption build to drive that demand through to service sector activity and then filter through to manufacturing sector activity. So these remain the key areas of focus, and I expect these to drive the markets near term.
Let's switch attention to the US-China conflict, which is going on at the moment, with the Chinese government introducing a security law in Hong Kong. How is this having an effect on the markets?
Well, we had our skeptics. I think I was one of them about the Phase 1 trade agreement. We saw, obviously, Trump's accusations and Beijing's accusations over the course of the coronavirus pandemic. And we've seen, obviously, relations deteriorate even further. And China's responded with the Hong Kong Securities Law, and the US are expected to respond to that by the end of the week, which could include sanctions. Markets have been fairly, in Teflon in terms of ignoring, the tensions through the early part of the week at least. This morning, we've seen risk appetite get tested, however, as focus returns, particularly with Trump announcing that the US will respond by the end of the week. So let's see what happens there. Beijing's not going to sit back this time round, not after the year and a half it took to get the Phase 1 trade agreement, in place. So expect risk appetite to be tested. But we do have that COVID-19, news to keep the markets buoyed. And obviously there's that vaccine, and progress being made on that. But US-China tensions, well, that relationship's not going to improve anytime soon. And China's talking about a new Cold War. Could you imagine China and Russia together against the US and, anyone else who wants to join the Trump, bandwagon, as it were? Well, that could be quite a rough time, when you're considering Iran and the Middle East as well.
So it seems the US-China conflict is not really having that much of a dramatic effect on the markets at the moment. But are there any other notable events that we should be aware of in relation to geopolitical risks, etc.?
Anything else to really consider? Well, other than COVID-19 vaccines and, what's going on between the US and China, there is very little else to factor in at the moment. There's one thing to consider, however, a little bit further down the track when we start seeing June numbers. Are the markets going to be as optimistic about an economic recovery, based on the fact that we've seen May numbers show a slight uptick from the depth of the abyss, when we saw the April numbers? So, that's the big question. So if we see June numbers fall off a bit from what we saw in May, May should see a bigger pickup just because, economies reopened. So there was perhaps a surge in demand. If that does materialize, then that market optimism will be tested. I've been pretty sort of against the grain on this one. I don't believe that the economy is going to rebound as quickly as the markets think. When you look at where the equity markets are right now and the rebound in the likes of the Aussie dollar and the loonie, hitting 137s against the dollar, these are quite big moves considering the doom and gloom and what lies ahead for the global economy. So let's see what happens when we start seeing these June numbers.
Well, that's all for today, Bob. Thank you so much for joining us as always, and I'll see you again next time. That was your Midweek Market Drivers. Don't forget to tune in next time. In the meantime, don't forget to follow us on all our social media outlets for all the latest information.